As always, Ryan Callahan here with Northeast Planning Associates. I hope you and yours are braving the chaos. Each day is a step closer to getting past this crisis, and I hope you and your family continue to stay healthy and safe. Due to this crisis, we've seen unprecedented actions taken by Congress, and one of the biggest ones to date was the passage of the $2 trillion Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act. I'm going to break down this month's video into a two-part series. The first with a focus on the individual, and the second on the business owner. The overall goal of the act is to provide economic stimulus and to help stabilize the economy as we push forward through this global quarantine. When it comes to individuals, I can tell you that the clients I'm working with are very similar to you. They want to take care of their families and keep everyone safe, but then you add on concerns around the recent volatility in the stock market and how that's affected their IRA and 401k values, and you have a recipe for serious anxiety. The CARES Act is over 800 pages of legislation created to really do one thing: put more money in your pocket to help alleviate the stress of the economy being shut down. There's a lot of information to cover, so let's get into it. Number one, expanded unemployment insurance. $600 per week has been increased to unemployment insurance for up to 4 months, and federal funding of unemployment insurance is now being provided to those who are not originally eligible for it: self-employed, independent contractors, and those with a limited work history. When workers run out of the state unemployment insurance, that's where the Fed comes in. They're going to add on an additional 13 weeks of unemployment benefits through the end of the year. Number two, recovery rebate for individual taxpayers. Now, I'm sure most of you have heard of this. The government's going to send me money. Well, it depends. The bill provides a $1,200 refundable tax credit for individuals and $2,400 for joint taxpayers. If the taxpayer has any children, they'll receive an additional flat $500 for each child. This is not being considered taxable income, and the rebate is a credit against those who have a tax liability and is refundable for those who don't owe any taxes. Now, why did I say it depends? Well, like anything else, benefits are always tied to income. For individuals filing single, the phase out of that benefit starts at $75,000 and is fully phased out at $99,000. For joint filers, phase out begins at $150,000 and fully phases out at $198,000. This is where it really starts to get confusing. The recovery rebates will use 2019 tax returns, but if you haven't filed for 2019 yet, then 2018 will be used. Taxpayers who are eligible for a larger rebate in 2020 that did not receive it in 2020 due to higher previous year incomes will then receive the remainder in the following tax year. And for those with higher income in 2020, the overpayment they receive will be forgiven. So long story short, let's say you have a single filer who made $100,000 last year. Well, they're fully phased out of the rebate and they're not going to receive anything. However, when that person goes to file for their 2020 taxes next year and their income falls significantly, then they would actually receive the credit in 2021. Let's flip sides. Let's say that person only made $35,000 last year, but they're going to have high earnings this year. Well, they're actually going to receive the advanced rebate, but then they're not going to owe that money back next year. Based on what we're hearing right now, for those of you who file your taxes electronically and have an ACH on file, those credits are going to be directly placed in your bank account. And for those who file by mail, you'll receive a check to deposit. Number three, temporary relief from required minimum distributions, also known as RMDs. If you're not familiar with an RMD is where at the age of 72, the government starts to force you to take distributions from your retirement accounts in order to drive tax revenue. Eliminating RMDs for 2020 gives individuals the flexibility to say, if I don't need the money, well, then I don't want to take it out. This will give you the opportunity to let that money grow so that if you need it in the future or if you're saving it for a beneficiary, you can do that. Number four, penalty-free distributions from retirement plans and IRAs for individuals affected by the virus. A lot of information here. I want to emphasize penalty-free, not income tax-free. The Act allows individuals to request distributions of up to $100,000 from retirement plans or IRAs for coronavirus-related reasons. Those reasons include adverse financial consequences due to being quarantined and or being furloughed, laid off, or having work hours reduced, and or being unable to work due to childcare. As I mentioned previously, there are penalty-free withdrawals. These individuals will still need to claim these withdrawals as taxable income. However, the government has also provided some flexibility here. Instead of owing all the taxes in the calendar year 2020, the IRS will now allow you to pay those taxes over the span of the next 3 years, starting this year. Or you can pay yourself back over the next 3 years and not pay any taxes whatsoever. Number 5, increased flexibility for loans from retirement plans. The government has allowed you the ability, along with the plan document of your 401k, to take loans against the value of your 401k. These loans are like a loan from a bank. However, the interest rate is based off of the prime rate, which is the lowest rate at which money can be borrowed, regardless of your credit score. And instead of paying a separate entity, the interest you pay actually goes back into your account. So in theory, you're taking a loan out against yourself and you're paying yourself back. The IRS has doubled the allowability of these loans to $100,000 or 100% of the 401k vested value, whichever is less. So for those of you who currently have a loan withstanding from a previous year, the Act now allows you to also delay repayment of that loan for up to 1 year. In closing, as I mentioned in the beginning, $2 trillion is being injected into this economy in the form of tax credits, rebates, and structural changes to retirement plans for the year 2020 in an effort to keep us all afloat. We covered a lot of information today, but it's all very important. For those of you who have questions or want to take it a step deeper, please give us a call. As of now, we're holding all of our meetings virtually, and we're here to help you with anything you need. Call us directly at 833-CAL-PLAN, that's 833-225-7526, or visit our website, www.callahanplans.com. Stay safe, everyone. Part 2 of this series will be coming to you shortly, covering the CARES Act in relation to business owners. Take care.